Before we dive in, please remember that I am not a financial advisor, and this video is for educational and entertainment purposes only. The information shared in this presentation should not be considered as financial advice. Investing involves risk, including the potential loss of principal. Always do your own research and consult with a licensed financial professional before making any investment decisions. There are over 120 different stock market apps available for download in the United States right now. 120. And if you're watching this, you've probably felt that overwhelming paralysis of choice. You open the App Store, type in investing, and you're hit with a wall of logos and promises. Your friend who's suddenly an expert because he bought GameStop at the right time tells you to use Robinhood. Your dad, who's been investing since before the internet was a thing, insists that Vanguard is the only respectable choice. And that finance influencer on TikTok is screaming at you to use Webull for their free stocks. It feels like you're standing in the middle of a digital Times Square, with everyone shouting a different direction. And this confusion has a real cost. A recent study found that nearly 1/3 of new investors quit within their first year. And one of the top reasons they gave? Overwhelming and confusing technology. They picked the wrong tool for the job. They downloaded an app designed for a hyperactive day trader, when all they wanted to do was quietly build a retirement nest egg. It's like being handed the keys to a Formula One race car, when all you need is a reliable sedan to get to work. You're going to get frustrated, you're going to feel like you're doing it wrong, and you're probably going to crash. This video is your exit ramp off that chaotic highway. We are going to cut through all the noise, the marketing gimmicks, and the affiliate links to give you a simple, powerful framework for choosing the absolute best platform for you. Not for your friend, not for your dad, but for your specific goals, your personality, and your life. By the end of this series, you won't just know which app to download. You'll understand why it's the right one, and you'll have the confidence to finally start your investing journey on the right foot. The secret is understanding that not all investors are the same. In fact, most of us fall into one of 4 main categories for investor archetypes. And once you identify which one you are, the choice becomes incredibly clear. First, you have the set it and forget it saver. This is the person who wants to build long-term wealth passively. They believe in the power of the market over decades, not days. Second, there's the active analyst trader. This person enjoys the game. They like doing the research, picking individual stocks, and want powerful tools at their fingertips to find an edge. Third is the all-in-one banker. This is the investor who values convenience above all else. They want their checking, their savings, their credit card, and their investments all under one beautifully integrated digital roof. And finally, we have the next-gen investor. They're interested in more than just stocks. They're looking at crypto, fractional shares of art, and social investing features. They want the cutting edge. For the rest of this video, we're going to do a deep dive into that first, and arguably most important archetype, the set it and forget it saver. So, who is this person? Let's see if this sounds like you. You have a career. You have responsibilities. You don't have the time or the desire to watch stock charts wiggle up and down all day. The thought of checking your portfolio every 10 minutes gives you anxiety, not a thrill. Your investment philosophy is simple. You want to consistently put money into the market by broad, diversified investments like index funds or ETFs, and then let the magic of compound interest do its work for the next 10, 20, or 40 years. Your goal isn't to time the market or find the next 10-bagger stock. It's to build durable, life-changing wealth slowly and steadily. You are playing the long game. If you just nodded your head, congratulations. You have the mindset that has built more millionaires than any other strategy in history. But this mindset requires a very specific type of tool. The app you choose should be your quiet, reliable, and low-cost partner, not a flashy, distracting casino. So what are the non-negotiable features for a set it and forget it saver? First and foremost is an obsession with low fees. For a long-term investor, fees are a silent killer. They are a termite, slowly eating away at the foundation of your wealth. A 1% fee might not sound like much, but on a $100,000 portfolio over 30 years, that can cost you hundreds of thousands of dollars in lost gains. You need a platform with $0 commissions on stock and ETF trades, and more importantly, a wide selection of low-cost index funds and ETFs. This is your bread and butter. Second, you need best-in-class automatic investing features. This is the engine of your entire strategy. Your app must allow you to set up recurring transfers from your bank account, and crucially, automatically invest that money into your chosen funds on a schedule you set. Whether it's $100 every Friday or $500 on the 15th of every month, This automation removes emotion and ensures you are consistently buying, a strategy known as dollar cost averaging. It puts your wealth building on autopilot. Third, the platform must offer retirement accounts. A set it and forget it saver isn't just investing in a standard brokerage account. They are maximizing tax-advantaged accounts like a Roth IRA or a traditional IRA. Your app needs to make it incredibly simple to open, fund, and manage these accounts. And finally, the user interface should be clean, simple, and encouraging of good behavior. You want an app that makes it easy to see your long-term progress, not one that bombards you with breaking news, trending stocks, or complex options chains. You don't need confetti and celebratory animations for making a smart, boring investment. You need stability. So, which platforms excel at serving this archetype? Three titans of the industry immediately come to mind: Vanguard, Fidelity, and Charles Schwab. Let's start with Vanguard. Vanguard is the original home of the set it and forget it investor. Their entire company philosophy, founded by the legendary John Bogle, is built around low-cost, passive investing. The company is literally owned by its own funds, which means its profits go back to the investors in the form of lower fees. Their interests are perfectly aligned with yours. For decades, Vanguard was the undisputed king. Their app and website used to be famously clunky and outdated, but they've invested heavily in modernizing them. It's still not the flashiest interface, but it's reliable, secure, and does exactly what a passive investor needs it to do, with access to some of the best, lowest-cost ETFs and mutual funds on the planet. Next up is Fidelity. Fidelity is an absolute powerhouse that offers a bit more flexibility. They are fantastic for the passive investor because they pioneered zero-expense ratio index funds. That's right, funds that cost you literally nothing to own. They have a massive selection of investment products, excellent automatic investing features, and fractional shares, which lets you invest with as little as $1. Where Fidelity shines is that its platform is robust enough to grow with you. If you start as a passive investor but later decide you want to get a little more hands-on, Fidelity has all the tools you'll need. Their app is modern, easy to navigate, and their customer service is consistently ranked among the best. Finally, there's Charles Schwab. Much like Fidelity, Schwab is a massive, reputable brokerage that has been serving investors for decades. They offer a huge range of low-cost investment options, a very user-friendly app, and fantastic educational resources for beginners. Schwab is often praised for its blend of great technology and human support. They are a fantastic choice for someone who wants a trusted, established name with a modern feel. And now that they've acquired TD Ameritrade, their platform is becoming even more powerful. For the set it and forget it saver, you truly cannot go wrong with any of these three. They are the gold standard for long-term, passive wealth building. But what if this all sounds a little too boring? What if the idea of just buying an index fund and waiting 30 years doesn't ignite a fire in you? What if you want to be in the driver's seat? You follow the market news, you enjoy analyzing companies, and you believe you can find opportunities the rest of the market is missing. If that's you, then you are our second archetype, the active analyst. And the tools you need, the data, the charting software, the order types, are a world away from the simple, quiet platforms we just discussed. You need a cockpit, not a passenger seat. And that's exactly what we're breaking down next. For the active analyst, the trading platform isn't just a tool. It's a command center. It's the digital extension of your brain, a place where data flows like a river, and your ability to interpret it, to act on it in milliseconds, is the only thing that separates profit from loss. You're not just buying a stock because you like the company. You're buying it because the 50-day moving average just crossed the 200-day, volume is spiking, and the relative strength index is showing a clear divergence. You live and breathe technical analysis, fundamental data, and market sentiment. You need a platform that not only keeps up but anticipates your next move. So let's pull back the curtain on the heavyweights, the platforms built for this exact purpose. And we have to start with the undisputed king of the hill, the benchmark against which all other serious trading platforms are measured, Thinkorswim. Originally its own company, now the powerhouse platform for TD Ameritrade and, by extension, Charles Schwab, Thinkorswim is less of an app and more of a universe. Opening it for the first time is like stepping onto the bridge of the Starship Enterprise. There are buttons, charts, and data streams everywhere. It's intimidating, and frankly, it's supposed to be. This platform isn't designed to be friendly. It's designed to be powerful. The charting capabilities are legendary. You can overlay hundreds of technical indicators, draw trend lines, Fibonacci retracements, and Gann fans to your heart's content. You can customize everything, from the color of your candles to the exact parameters of a stochastic oscillator. But here's the real magic. The tools go beyond just looking at the past. Thinkorswim has a feature called On Demand, which is like a time machine for the stock market. You can go back to any day, any minute in the past, and trade the market as if it were happening live. Want to see how your strategy would have performed during the 2008 crash or the dot-com bubble? On Demand lets you do it. It's the single most powerful backtesting tool available to a retail trader. Then there's the order entry. You're not just clicking buy. You're placing complex, multi-leg conditional orders. Things like, if stock XYZ crosses above this price, then buy 100 shares, but also place a trailing stop loss 8% below my entry price, and simultaneously send a notification to my phone. This is the level of surgical precision the active analyst demands. It has a full-featured paper trading mode, so you can practice with fake money until you've mastered the system. The learning curve is a vertical cliff, let's be clear. You will spend weeks, maybe months just learning where everything is. But for the trader who needs every possible piece of data and every conceivable tool at their fingertips, there is simply no substitute. Thinkorswim is the professional-grade arsenal. Now, if Thinkorswim is the feature-packed command center, our next platform is the stripped-down, brutally efficient Formula One race car. I'm talking about Interactive Brokers, or IBKR. For decades, Interactive Brokers was the secret weapon of professional traders, hedge funds, and serious high-volume players. Their retail-facing platform, Trader Workstation, or TWS, reflects this heritage. It's not as graphically polished as Thinkorswim. Some might even call it dated. But what it lacks in visual flair, it makes up for in raw, unadulterated speed and cost-effectiveness. The core appeal of IBKR is twofold: global access and rock-bottom commissions. While other brokers give you access to U.S. markets, IBKR gives you the world. You can trade stocks on the Hong Kong Exchange, futures in Germany, and options in Australia, all from a single unified account. For the analyst whose strategy transcends borders, this is a non-negotiable feature. And the commissions, they are, in many cases, the lowest in the industry, especially for active traders who move serious volume. Their pricing structure is built for people who trade hundreds of times a month, not once or twice. The Trader Workstation platform is a testament to function over form. It's a customizable mosaic of windows, each showing a different piece of critical information. Real-time quotes, Level 2 data, which is the market's live order book, news feeds, and advanced order entry tickets. It's built for speed. The order routing technology is designed to get you the best possible price execution, saving you fractions of a penny on every share, which adds up to thousands of dollars over a year for an active trader. IBKR is for the analyst who says, I don't need the fancy graphics. I need global access, lightning-fast execution, and a cost structure that doesn't eat into my profits. Give me the raw data and get out of my way. It's a professional's tool through and through. But what if you want a balance? What if you want the power of a top-tier platform but with a more modern, intuitive interface? That's where Power eTrade enters the conversation. eTrade has done a phenomenal job of building a platform that bridges the gap between the overwhelming complexity of Thinkorswim and the bare-bones efficiency of Interactive Brokers. It's a high-performance luxury sedan. It's fast, it's powerful, but it's also comfortable and easier to drive. Power eTrade shines particularly bright for options traders. The platform is packed with analytical tools specifically for options strategies. Features like spectral analysis and risk-reward graphs allow you to visualize the potential profit and loss of a complex, multi-leg options trade before you ever place it. You can see your probability of profit, your max loss, your max gain, and where your break-even points are, all laid out in a clean graphical interface. The charting is also top-notch, with a full suite of technical studies and drawing tools. And while it might not have the time machine feature of Thinkorswim, its paper trading mode is robust, allowing you to test your strategies without risking real capital. The platform feels responsive and modern, whether you're using the desktop version or their highly rated mobile app. Power eTrade is for the active analyst who values a streamlined workflow and a user-friendly design, but is unwilling to compromise on the core tools needed for serious analysis and complex trade execution, especially if options are a major part of their strategy. These three platforms, Thinkorswim, Interactive Brokers, and Power eTrade, form the holy trinity for the active analyst. They are the cockpits, the command centers where data is king and speed is everything. They demand a commitment to learning, but they reward that commitment with unparalleled control and insight. They're not for setting and forgetting. They're for engaging with the market on a deep analytical level, every single day. But this raises an interesting question. What if you're not just a general analyst but a specialist? What if your entire universe revolves around the intricate dance of calls, puts, implied volatility, and the Greeks? The platforms we just discussed are fantastic all-rounders, but some platforms are built from the ground up with one thing, and one thing only, in mind: mastering the world of options. You are the options oracle. And for you, the right tool isn't just about charting a stock price. It's about modeling the future. That's the specialist we're diving into next. For the options oracle, a standard investing app is like trying to perform brain surgery with a plastic spork. It's simply the wrong tool for a job that demands precision, depth, and a view of the market that goes far beyond a simple line chart. You see, you're not just betting on whether a stock will go up or down. That's a checkers move in a world where you're playing three-dimensional chess. You're trading volatility itself. You're trading the passage of time. You're crafting intricate strategies with multiple moving parts, where risk and reward can be defined with surgical accuracy before you ever press the buy button. Your canvas isn't a stock's price. It's the entire universe of its potential futures. So, what does your command center look like? It's not a clean, minimalist interface designed to be calming. No, it's a cockpit. It's dense with information, because every single data point is a vital instrument telling you something about the flight. The centerpiece is the options chain. On a basic app, this is just a list of contracts and prices. For you, it has to be a living, breathing organism. You need to see at a glance not just the bid and ask, but the open interest, the volume, the implied volatility for every single strike price, and the Greeks. The Greeks. This is the secret language of the oracle, and your platform must be fluent. For the uninitiated, these sound like fraternity names, but for you, they are the laws of physics that govern your trades. Delta is your speedometer. It tells you how much your options price is expected to move for every $1 change in the underlying stock. Gamma is your acceleration. It tells you how fast that speedometer, your delta, is going to change. It's the measure of your trade's instability. And in the world of options, instability can mean explosive profit or sudden death. Then there's theta. Theta is the relentless ticking of the clock. It's the enemy of the options buyer and the best friend of the options seller. It's the measure of how much value your option loses each day simply due to the passage of time. A great options platform doesn't just show you theta as a number. It makes you feel it. It shows you the decay curve, helping you visualize that ice cube melting in the sun, turning your premium into water. And Vega, the wild card. Vega tells you how sensitive your option is to changes in implied volatility, the market's best guess of how much a stock will swing in the future. When news hits and fear spikes, volatility explodes, and Vega is what translates that market panic directly into your profit and loss. Your ideal app doesn't just list these numbers. It allows you to customize your view, to sort and filter your options chain by any of the Greeks. You want to instantly find the options with the highest theta to sell, or the highest gamma to capture explosive moves. You're not scrolling. You're scanning like a pilot scanning their instruments for the slightest anomaly. But seeing the numbers is only step one. The oracle needs to model the future. This is where the most critical tool comes in: the profit and loss graph, or P/L analyzer. This is your time machine. Before you risk a single dollar, you need to be able to build a hypothetical trade. Not just a simple call or put, but a complex multi-leg strategy like an iron condor, a butterfly spread, or a straddle. You plug in the legs of your trade, and the platform instantly generates a visual graph. This graph is your crystal ball. It shows you your maximum potential profit, your maximum potential loss, and your break-even points. But the best platforms take it a step further. They let you play God. You can drag a slider to change the date, and the graph will morph, showing you how theta decay will affect your position over time. You can crank up a dial for implied volatility and watch, in real time, how a volatility spike would expand your profit zone or shatter your position. You can even overlay the graph on the stocks chart to see where your break-even points lie in relation to historical support and resistance levels. This isn't just trading. It's architectural design. You are constructing a risk profile, and your app is your advanced computer-aided design software. Execution is another non-negotiable. When you're trading a four-legged spread, you can't afford to leg in one piece at a time, hoping you get good prices on all four. The market can move in a split second and turn a winning setup into a loser before you've even built it. You need an app that offers complex order types, allowing you to send the entire multi-leg strategy to the market as a single, atomic order, with a specified net debit or credit. This ensures you get into the trade at the price you want or not at all. Speed and reliability are paramount. A laggy platform isn't an annoyance. It's a catastrophic failure point. And let's talk about the cost of doing business. As an active options trader, commissions can eat you alive. A platform that charges a high per-contract fee is taking a slice of your profit before you even have a chance to make it. The options oracle gravitates towards platforms that were built with this in mind, often offering zero-commission stock trades and incredibly low, competitive per-contract fees for options, sometimes as low as 50 or 65 cents per contract, and often capped at a maximum fee per leg. This pricing structure acknowledges your high-frequency, complex strategy style and doesn't penalize you for it. It aligns the platform's success with yours. The community and educational resources on these platforms are also different. They're not serving up articles about, what is a stock? They're hosting daily shows with seasoned traders, breaking down the morning's volatility crush, analyzing the VIX, and debating the best strategies for the week's earnings announcements. It's a fire hose of high-level, actionable information because the platform assumes you're not a tourist. You're a professional who has come to work. So who is this for? This is for the trader who loves the game. The person who sees the market not as a place to park money, but as an intellectual battlefield. You're the strategist, the statistician, the risk manager. You find beauty in a perfectly balanced risk-reward profile. You're not afraid of a steep learning curve because you know the power that lies on the other side. The interface that scares away beginners is the very thing that empowers you to execute your vision with unparalleled control. You are the options oracle, and you need a tool forged in the same fire as your ambition. But what if this sounds like an absolute nightmare? What if the idea of staring at volatility skews, calculating theta decay, and managing a four-legged options position makes you want to just bury your money in a coffee can in the backyard? What if you believe in the market's long-term power, but you want your money to work for you, without you having to work for it? That's a different philosophy entirely. It's a philosophy built on consistency, patience, and the power of automation. That's the mindset of our next investor, the automator. The automator isn't lazy. Far from it. The automator is smart. They understand that the single greatest enemy of a successful investment strategy isn't a market crash or a bad stock pick. It's emotion. It's the panic selling when the news looks grim, the FOMO buying when a stock is rocketing to the moon. The automator knows that the best way to beat human emotion is to remove the human from the day-to-day equation. They want to build a financial machine, a machine that runs in the background of their life, quietly, efficiently, relentlessly, compounding their wealth while they focus on their career, their family, their passions. They don't want to time the market. They want to own the market, piece by piece, week by week, without ever having to log in and click buy. This philosophy is called dollar cost averaging, and it is the automator's superpower. The idea is simple. You invest a fixed amount of money at regular intervals, regardless of what the market is doing. When prices are high, your fixed amount buys fewer shares. When prices are low, that same amount buys more shares. Over time, this smooths out your purchase price and reduces the risk of investing a huge lump sum right before a downturn. It's a strategy that turns market volatility from a source of fear into an opportunity. And the apps built for the automator are masterpieces of this principle. Let's start with the gateway drug to automated investing, Acorns. The concept is so simple, it's genius. You link your credit or debit card, and every time you make a purchase, Acorns rounds it up to the nearest dollar and invests the spare change. That $4.50 latte? 50 cents goes into your investment account. That $23.20 tank of gas? 80 cents invested. Feels like nothing. It's the digital equivalent of finding loose change in your couch cushions. Except instead of ending up in a dusty jar, it's put to work in a diversified portfolio of ETFs. For the person who has never invested a dime, who is terrified of the complexity, Acorns is revolutionary. It removes the two biggest barriers: the feeling that you don't have enough money to start, and the paralysis of deciding when to invest. There are no decisions to make. You just live your life and your wealth grows in the background, one penny at a time. You can also set up recurring investments, say $20 every Friday, to supercharge the process. The portfolios are pre-built for you, based on your risk tolerance, from conservative to aggressive. You don't pick stocks. You don't analyze charts. You just save and invest. It's the ultimate set-it-and-forget-it machine. But like any machine, it has its limitations. The fees, while small, can be significant on a very small account balance. And for the automator who starts to learn a little more, who wants a bit more control over where their money is going, the simplicity of Acorns can start to feel restrictive. What if you believe in technology more than real estate? What if you want to tilt your portfolio towards green energy? Acorns doesn't really give you that choice. And that's when the automator graduates. That's when they discover the power of M1 Finance. If Acorns is a simple automatic savings jar, M1 Finance is a custom-built, automated assembly line for your wealth. This is where the automator gets to be the architect. The core concept of M1 is the pie. You decide what you want your ideal portfolio to look like, and you build it slice by slice. Maybe you want your pie to be 50% in an S&P 500 ETF, 20% in an international stock ETF, 10% in a bond fund, 5% in Tesla, 5% in Apple, and 10% in a clean energy fund. You build this custom pie one time. You are the chef creating the perfect recipe. And then you automate it. You set up a recurring deposit, $100 every Monday, $500 on the first of the month, whatever you choose. Here's the magic. M1 software automatically allocates that new money across your pie to keep it balanced to your exact specifications. If your Tesla slice has grown and is now taking up too much of the pie, your new money will automatically flow into the other, underweight slices to bring everything back to your target percentages. It's called dynamic rebalancing, and it is brilliant. It forces you to buy low and trim your winners without ever thinking about it. This is automation with intention. You're not just investing spare change. You are systematically building a portfolio of your own design, without the emotional baggage of making weekly buy orders. M1 Finance is for the automator who has a specific vision for their financial future and wants a machine to execute that vision with ruthless efficiency. It combines the customization of a brokerage account with the discipline of a robo-advisor. There are no trading fees, and you can even buy fractional shares, meaning your $100 can be perfectly distributed across all your slices, even if you can't afford a full share of Amazon or Google. It's an elegant, powerful tool for building long-term wealth on autopilot. But there's a third type of automator. This person loves the idea of automation, but they don't want to design the pie. They don't want to pick the ETFs or the stocks. They trust that computer algorithms and financial experts can do it better. They want the financial equivalent of a self-driving car. You tell it the destination, retirement in 30 years, a down payment in 5, and it handles everything. The steering, the gas, the brakes, even the tax strategy. For this automator, the destination is a full-service robo-advisor like Betterment or Wealthfront. These platforms take automation to the highest level. You don't build a portfolio. You answer questions. What are you saving for? When do you need the money? How do you feel about risk? Based on your answers, they build a globally diversified, low-cost ETF portfolio for you. But their real power goes beyond just picking the funds. Their algorithms manage your account with a level of sophistication that was once only available to the ultra-wealthy. Their killer feature is automated tax loss harvesting. It sounds complicated, but the concept is simple. If one of your investments goes down in value, the platform will automatically sell it at a loss and immediately buy a very similar, but not identical, investment to keep your portfolio on track. That small temporary loss you just harvested can then be used on your tax return to offset investment gains or even a portion of your regular income. It's a way of turning small market dips into a tangible tax benefit, all done by a computer without you lifting a finger. Over years, this can add a significant amount to your net returns. Betterment and Wealthfront are also goal-oriented. They show you your progress towards your specific goals, telling you if you're on track and suggesting adjustments if you're falling behind. They are comprehensive wealth management tools designed to optimize every aspect of your investment strategy automatically. The trade-off for this high-end service is a management fee, typically a small percentage of your total assets per year. For the automator who believes that professional-grade optimization is worth the cost, and who wants to be completely hands-off, these robo-advisors are the pinnacle of the automated investing world. So for the automator, the choice isn't if they should automate, but how. Do you want the effortless simplicity of turning spare change into a nest egg with acorns? Do you want the power to architect your own custom portfolio and have it built automatically with M1 Finance? Or do you want the full, self-driving, tax-optimized wealth management of a platform like Betterment? Each is a brilliant machine designed to build wealth through consistency and discipline. They are the perfect tools for someone who wants to play the long game, who understands that slow and steady wins the race. But what if you enjoy the race? What if you believe in the power of individual companies, in finding the next Amazon or the next Apple before the rest of the world catches on? What if you're willing to do the homework, to read the reports, to understand the fundamentals of a business? That requires a different set of tools and a different mindset entirely. You're not just automating, you're analyzing. You are the long-term growth investor. You're not just automating, you're analyzing. You are the long-term growth investor. This isn't about setting and forgetting. This is about building a conviction. It's about looking at a company not for what its stock price did yesterday, but for what the business itself can become in 5, 10, even 20 years. You're not just buying a ticker symbol. You're buying a piece of the future. You're the kind of person who sees a small, innovative tech company and doesn't just see code. You see a potential revolution in how we live. You see an emerging biotech firm and don't just see clinical trials. You see a cure. You are, in essence, a venture capitalist for the public markets. Your philosophy is simple. Find exceptional companies with a durable competitive advantage, what Warren Buffett famously calls a moat, and hold on as they grow and dominate their industries. You're not looking for a quick 10% pop. You're hunting for the 10-bagger, the stock that can multiply your initial investment 10 times over. This is the path of legends. It's how people who bought Amazon in the early 2000s, or Apple after Steve Jobs returned, built generational wealth. But it's a path that demands more than just patience. It demands a specific set of tools. Your brokerage app is no longer just a place to execute trades. It is your research lab, your intelligence agency, and your library, all rolled into one. So what separates a basic app from a growth investor's command center? Comes down to one word: data. Deep, meaningful, and accessible data. First and foremost, you need a platform with a world-class research portal. I'm not talking about a flimsy news feed and a simple line chart. I'm talking about having the keys to the kingdom. You need instant access to a company's financials going back years. You need to be able to pull up their 10K and 10Q reports, the official SEC filed documents, with a single tap. This is where the real story of a company is told. In the cold, hard numbers of its balance sheet, income statement, and cash flow statement. Is revenue growing consistently? Are profit margins expanding? Is their debt manageable? An app that buries these documents or makes them hard to read is an immediate disqualifier. But the numbers are only half the story. You also need qualitative analysis. This means access to professional, third-party analyst reports. Think of firms like Morningstar, Argus, or CFRA. These are the people whose entire job is to dissect companies. A top-tier app will provide these reports to you for free. It's like having a team of Wall Street analysts working for you, offering their bull and bear cases, their price targets, and their reasoning. You don't have to agree with them, but seeing their perspective is an invaluable part of building your own thesis. This is where the big, established players truly shine. Platforms like Fidelity and Charles Schwab have built their reputations on providing these institutional-grade research tools to the retail investor. Opening the Fidelity app, for example, feels less like using a simple trading tool and more like logging into a financial intelligence terminal. You can screen for stocks based on hundreds of criteria, from PE ratios to return on equity, and then dive into a rich profile for each company, complete with aggregated analyst ratings, detailed earnings history, and even environmental, social, and governance, or ESG scores. It's a fire hose of information, but for the growth investor, information is power. Similarly, Charles Schwab offers its own proprietary Schwab equity ratings, which provide a straightforward A through F letter grade on a stock's potential. It's a fantastic starting point for your own research, backed by a massive amount of quantitative analysis. When you combine that with their deep library of market commentary and educational resources, it becomes an ecosystem designed not just for trading, but for learning and making informed decisions. The second critical tool is sophisticated charting. Now you might think, I'm a long-term investor, not a day trader. Why do I need fancy charts? Because even for a long-term hold, your entry point matters. A great chart helps you visualize the story of a stock's price over time. You want to see long-term trends, identify support and resistance levels, and understand the stock's volatility. You need an app that lets you easily overlay technical indicators like moving averages or the relative strength index, not to scalp pennies, but to gain a deeper context for the market sentiment around your chosen company. An app that only shows you a basic one-year line chart is like trying to navigate the ocean with a map of a pond. This is an area where a platform like E-Trade, now part of Morgan Stanley, really excels. Their standard app is solid, but their Power E-Trade platform, which is also free to use, offers some of the most robust charting tools available. You can customize charts to your heart's content, draw trend lines, and access a full suite of technical studies. It gives you the ability to analyze a stock from every conceivable angle, which is crucial when you're planning to commit significant capital for a significant amount of time. The third pillar for the growth investor is the quality of the news and information flow. You need to know what's happening with your companies and your industries right now. Did your tech company just announce a breakthrough patent? Did a competitor just launch a rival product? Did the CEO just sell a huge chunk of their shares? This information is vital. A great app will integrate a real-time news feed from reputable sources like Reuters, Bloomberg, or the Associated Press. It will allow you to set up alerts for specific stocks, so if there's breaking news, a press release, or an SEC filing, it gets pushed directly to your phone. You need to be able to react to fundamental changes in the business, not just the noise of the market. So let's put it all together. Who are the champions for the long-term growth investor? Fidelity is arguably the king of the hill. Their combination of zero expense ratio index funds for the core of your portfolio, fractional shares for dollar cost averaging into your favorite growth stocks, and an absolutely unmatched best-in-class research portal makes them a one-stop shop for serious investors. Their app is clean, powerful, and puts an arsenal of data at your fingertips without feeling overwhelming. Charles Schwab is a very close competitor, often appealing to those who want a more integrated financial picture, combining their banking and investing in one place. Their customer service is legendary, and their research and insights are top-notch. It feels like a premium white-glove service, even for smaller accounts. Choosing between Fidelity and Schwab is often a matter of personal preference and user interface, as both offer the core toolkit you need to succeed. And then there's E*TRADE. With the backing of Morgan Stanley, they've become a research powerhouse in their own right. If you want the deep fundamental data but also want access to a more powerful trading platform, for when you want to get more tactical, E*TRADE provides a fantastic bridge between the worlds of long-term investing and active trading. But here's the critical warning for the growth investor. The biggest risk you face isn't picking the wrong company. It's not a market crash. It's your own psychology. You can have the best research in the world from Fidelity, the best charts from E*TRADE, and the best service from Schwab, but none of it will matter if you panic and sell a great company during a temporary downturn. Growth investing is a test of conviction. It's easy to own a stock when it's up 50%. It is brutally difficult to hold on, or even buy more, when it's down 50%, even if the long-term story is still intact. Your app, with its constant stream of red and green numbers, can become a weapon turned against you. The constant updates, the breaking news alerts about market turmoil, the fear-mongering headlines, they are all designed to trigger an emotional fight-or-flight response. And in investing, that response is almost always the wrong one. The best platforms give you the tools to turn off the noise and focus on the signal. But ultimately, the discipline has to come from you. This leads to a fascinating question. What if you love the idea of high growth, but you don't have the stomach to watch a stock you own drop by half? What if you want to harness that volatility instead of enduring it? What if you want a strategy that's measured not in years, but in weeks, days, or even minutes? For that, you need to evolve. You need to move beyond the mindset of an owner and adopt the mindset of a tactician. You stop being a long-term investor, and you become a trader. And for that entirely different game, you need a completely different arsenal of weapons. So let's define what a trader really is. A trader views the stock market not as a collection of businesses to be owned, but as a vast ocean of data, sentiment, and probability. They aren't betting on a company's 10-year plan. They're betting on what the price of its stock will do in the next 10 hours, 10 days, or 10 weeks. Their decisions are driven by patterns, by technical indicators, by the flow of money, and by catalysts like earnings reports or economic data. They are the fighter pilots of the financial world, requiring a cockpit that gives them instantaneous information and flawless control. Your simple, friendly app with the green buy button is like trying to dogfight in a hot air balloon. It's just not going to work. This brings us to our third major category of investment apps, the powerhouses. These aren't really apps in the way you think of something you download to your phone. They are professional-grade software suites, most of them born on the desktop, that put a staggering amount of data and analytical power at your fingertips. They have a learning curve that looks less like a hill and more like the north face of Mount Everest. But for the serious trader, climbing that mountain is non-negotiable. The undisputed king of this category, the platform that has defined professional-level retail trading for over a decade, is thinkorswim. Originally its own company, it was acquired by TD Ameritrade, and now lives under the Charles Schwab umbrella. And let me be clear, Comparing Thinkorswim to Robinhood is like comparing a nuclear submarine to a canoe. They both float, but that's where the similarities end. The heart of Thinkorswim, and the reason traders swear by it, is its charting capability. The charts on this platform are not just a picture of a stock's history. They are a living, breathing canvas for technical analysis. You have access to hundreds of built-in studies and indicators, from simple moving averages to complex tools like Ichimoku clouds and Bollinger Bands. But that's just the start. You can modify every single parameter of every single indicator. You can overlay multiple stocks on the same chart. You can draw trend lines, Fibonacci retracements, and support and resistance levels with pixel-perfect precision. And if the hundreds of built-in tools aren't enough, there's ThinkScript. This is a proprietary, simplified coding language that lets you build your own custom indicators from scratch. If you have a unique theory about how price and volume interact, you can code it, backtest it, and plot it directly on your chart. This is a level of customization that beginner apps can't even dream of. It allows a trader to create a view of the market that is entirely unique to their specific strategy. But what if you have a strategy and you're not ready to risk real money? This is where Thinkorswim's second killer feature comes in: paper trading. Now, lots of platforms have paper trading, but Thinkorswim's is on another level. It's not just a fake account with play money. It's a full-fledged market simulator. You can trade stocks, options, futures, everything, in a live environment with delayed data, without risking a single penny. Even more powerful is a feature called On Demand. This lets you go back in time. You can pick any day from the past, say the day of the 2020 market crash or the day a huge earnings report came out, and trade that day's market action minute by minute, as if it were happening live. It is the single greatest practice tool ever created for a trader. It's like a pilot having a flight simulator that can replicate the exact weather conditions of any flight in history. It lets you test your strategies under fire, learn your emotional responses, and refine your execution, all in a completely safe environment. Next, let's talk about execution. A trader knows that how you enter and exit a trade is just as important as which stock you pick. The powerhouses offer a dizzying array of advanced order types that give you surgical control. You're not just limited to market or limit orders. You can place conditional orders like a one cancels the other, or OCO order. This means you can set a profit target above the current price and a stop loss below it. Whichever one gets hit first, the other order is automatically canceled. This lets you walk away from your computer knowing your trade is managed. You can use trailing stops that automatically move up as a stock price rises, locking in profits while still giving the stock room to grow. You can create complex, multi-leg options orders and send them to the market as a single transaction. This is the difference between firing a rifle with a precision scope and just throwing a rock. And how do traders even find these opportunities in the first place? They use scanners. Thinkorswim has a stock and options scanner that is breathtakingly powerful. You can scan the entire universe of thousands of stocks in real time for an almost infinite combination of criteria. For example, you could tell it, "Show me all technology stocks trading above their 50-day moving average, with a market cap over $10 billion, that have unusual options activity, and are up at least 3% today on higher than average volume." And in less than a second, it will give you a list. This is how traders filter out the noise and focus only on the stocks that meet their exact predefined setup. They don't search for opportunities. They build a machine that brings the opportunities to them. Now, who is this for? The Powerhouse platform is for the dedicated swing trader, the hardcore day trader, and the serious options strategist. It's for the person who sees trading not as a passive investment, but as an active, skill-based pursuit. It's for someone willing to dedicate dozens, if not hundreds, of hours to learning the software before they even place a real trade. The downside is obvious. It is unbelievably complex. The interface is a sea of buttons, tabs, and numbers that is guaranteed to intimidate any beginner. It can lead to analysis paralysis, where you have so much information you don't know what to do with it. And while it does have a mobile app, it's a condensed, slightly clunky version of the desktop platform. The real work is done on a big monitor or multiple monitors where you have the screen real estate to see the whole battlefield. Thinkorswim may be the king, but it's not the only player in this space. A major contender, especially for those who focus on options, is tastytrade. Created by the original founders of Thinkorswim after they sold it, tastytrade is a platform built with a very specific philosophy in mind: trading options for income by selling premium and playing the probabilities. While Thinkorswim is a Swiss Army knife that does everything well, tastytrade is a scalpel designed for one thing: fast, efficient, high-volume options and futures trading. Its interface is cleaner and more intuitive for setting up complex options spreads like iron condors or strangles. You can literally just click and drag on a chart to build the trade you want, and it instantly visualizes your max profit, max loss, and probability of success. It's built for speed. Its entire reason for being is to help traders who are placing dozens of trades a month, managing a large portfolio of options positions, and need to see their overall portfolio risk at a glance. It's less about deep single-stock technical analysis and more about broad portfolio-level strategy. So if you're an options trader who subscribes to the tasty trade philosophy of selling volatility, it might even be a better choice than the more generalized thinkorswim. These powerhouse platforms represent the pinnacle of what's available to the retail trader. They are the command centers for the tacticians of the market. Using one of these is a declaration. It says you are no longer a passive passenger on your investment journey. You are taking the controls with all the power and all the responsibility that comes with it. But what if you're not a pure long-term investor, and you're not a hardcore minute-to-minute trader either? What if you're somewhere in between? What if you need a blend of elegant design and powerful tools? That's where our next category comes in, the hybrids. These hybrid platforms are built for the investor in motion. You're past the point of just wanting to buy a few shares of Apple and forget about them for a decade. You've started to understand the rhythm of the market. You've felt the thrill of a good entry point and the sting of a bad one. You're hungry for more information, better tools, and greater control, but you don't want to feel like you need a PhD in quantitative finance just to place a trade. You want the power of a professional's toolkit, but with the user experience of a modern tech app. You're the active, engaged investor, and this category is designed specifically for you. Let's start with the undisputed king of this space. The platform that became the go-to alternative when beginner apps started showing their limitations. I'm talking about Webull. Think of Webull as the next logical step in your investing evolution. It's like graduating from a simple point-and-shoot camera to your first real DSLR. Suddenly, you have access to all these new buttons, dials, and settings. At first, it might feel a little intimidating, but you quickly realize that each one gives you a new level of creative control. That's Webull in a nutshell. When you open the app, you're not just greeted with a simple line chart. You're given access to full, real-time candlestick charts with dozens of technical indicators you can overlay, from moving averages and Bollinger Bands to MACD and RSI. This is the language of technical analysis, and Webull puts it right at your fingertips for free. It's a game-changer for anyone wanting to move beyond just buy low, sell high, and start understanding market trends and momentum. But it goes deeper. Webull offers free, real-time Level 2 market data. Now, for the uninitiated, that might sound like jargon, but it is incredibly powerful. Instead of just seeing the current bid and ask price, Level 2 shows you the order book. You can see the list of buy and sell orders at different price points, giving you a sense of the supply and demand for a stock in real time. It's like having X-ray vision into the market's immediate intentions. Most platforms charge a hefty monthly fee for this data. Webull gives it to you for free. And for those who want to practice before they play with real money, Webull has one of the best paper trading features on the market. You get $1 million in virtual cash to test out any strategy you can dream of, whether it's swing trading tech stocks or experimenting with options. It's a full-featured sandbox that lets you make your mistakes without costing you a dime. Add in extended trading hours that run from 4 a.m. to 8 p.m. Eastern, and you have a platform that empowers the active trader who has a day job. You can react to pre-market news or after-hours earnings reports, giving you an edge that 9-to-5 investors just don't have. So, who is Webull perfect for? It's for the investor who feels constrained by simpler apps. You want to start doing your own charting, you want to understand market depth with Level 2 data, and you want the flexibility to trade before the opening bell and after the closing bell. It's an incredible amount of power for a zero-commission platform. However, that power comes with a cost: complexity. For a brand new, never-invested-before beginner, the interface can feel like sitting in the cockpit of a 747. It's not impossible to learn, but the learning curve is definitely steeper. Now, what if you looked at Webull and thought, this is great, but I want more? More data, more analytics, more of a global perspective. If that's you, then you need to meet Webull's fiercest competitor, Moomoo. If Webull is a DSLR camera, Moomoo is that same camera with a telephoto lens, a drone, and a satellite uplink. It's designed for the data-hungry investor who wants to absorb as much information as humanly possible before making a decision. Moomoo is owned by a Tencent-backed company, and it brings a level of data intensity that is almost unheard of in the free-to-use space. Like Webull, it offers incredible charting tools and extended trading hours. But Moomoo kicks it up a notch. It offers free level 2 data with up to 60 levels of bids and asks. That's not just X-ray vision, that's a full-body MRI of the market's order book. You also get access to things like real-time options chain analysis and something called short sale analysis, which helps you gauge the bearish sentiment on a stock. These are tools that, just a few years ago, were reserved for paying customers on high-end platforms. Moomoo also has a much stronger focus on integrating news and community insights directly into the trading experience. You can see what the community is saying about a stock, access 24/7 financial news, and even view analyst ratings, all without ever leaving the stock's main page. It's an information firehose. For someone who wants to be completely immersed in the market, this is heaven. You can track capital flows to see if big money is moving into or out of a stock, and you can access markets beyond just the US, like Hong Kong and China A-shares, making it a great option for those with a more global investment thesis. So who wins in the Moomoo versus Webull showdown? Moomoo is for the true data junkie. If your idea of a good time is digging through order books, tracking institutional money flow, and having every possible piece of data at your disposal, Moomoo is your platform. It's slightly more complex and can feel even more cluttered than Webull, but the sheer depth of its free data and analytical tools is unmatched in this category. It's for the investor who believes that more information leads to better decisions. But let's pump the brakes for a second. Both Webull and Moomoo are built around the idea of active trading. Their features are designed to help you analyze charts and make frequent decisions. What if that's not your primary goal? What if you're a hybrid investor from a different perspective? You want more than a simple robo-advisor, but you see investing as just one part of a much bigger financial picture. You want your investments to work in harmony with your checking account, your savings, your loans, and your long-term goals. For that, we need to look at a completely different kind of hybrid SoFi Invest. SoFi, which stands for social finance, didn't start as a brokerage. It started with student loans and expanded into a full-service digital bank. SoFi Invest is their answer to the investing world, and its greatest strength is its seamless integration into a complete financial ecosystem. This is the platform for the person who wants to consolidate and simplify. With SoFi, you can have your checking and high-yield savings account, your credit card, your personal loans, and your investment portfolio all under one roof, in one beautifully designed app. This isn't just for convenience. It creates a holistic view of your financial health. You can instantly transfer money from your savings to your investment account to buy a dip, or sell some stock to pay off your credit card, all within seconds. SoFi Invest allows you to be as active or as passive as you want to be. They have an active investing side where you can buy and sell stocks and ETFs with zero commission, and they offer fractional shares, which they call stock bits. So you can invest in your favorite companies with as little as $5. But they also have an automated investing side, which is a top-tier robo-advisor that will build and manage a diversified portfolio for you based on your risk tolerance, with no management fees. You can literally have both a self-directed portfolio and a managed one side by side in the same app. One of SoFi's most unique features is its regular access to initial public offerings, or IPOs. Historically, getting in on a company's stock at its IPO price was something reserved for Wall Street insiders and the ultra-wealthy. SoFi has democratized this, allowing its members to invest in certain IPOs at the same price as the big institutions. This is a massive perk that you just won't find on most other platforms in this category. So, who is SoFi Invest for? It's for the great consolidator. It's for the person who wants a 360-degree view of their finances and believes that investing shouldn't be a separate, isolated activity. It's for someone who appreciates having both active and passive investing options under one roof, and who might want to take a shot at an IPO. While its charting and technical analysis tools are nowhere near as powerful as Webull or Moomoo, its strength lies in its all-in-one design and its focus on your overall financial well-being. It's less of a trading platform and more of a complete financial headquarters. So there you have it, the three faces of the hybrid investor. The technical analyst in training, who's graduating to the powerful charting and data of Webull. The data scientist, who craves the firehose of information and institutional-grade tools offered by Moomoo. And the financial holist, who wants to integrate their investments into a single, elegant ecosystem with SoFi. Each one offers a massive step up from the beginner apps, but they take you down very different paths. But what if even these powerful tools aren't enough? What if you're not just an active investor, but you're bordering on being an obsessive one? You need professional-grade software, the kind you see on the trading floors in movies, with customizable layouts, complex option strategies, and direct-to-market order routing that executes in milliseconds. For that, you have to leave the hybrids behind and step into the world of the true power users. You have to enter the realm of the pros. This is where the game changes. This isn't about buying a few shares of a company you like and checking on it once a quarter. This is the command center. This is the digital trading floor where careers are made and lost, not on the scale of years, but on the scale of minutes and sometimes seconds. The apps we're about to discuss aren't designed to be friendly. They are not designed to be simple. They are designed to be one thing and one thing only: powerful. Think of it like this. The beginner apps are like your driver's ed sedan. Safe, simple, gets you from point A to point B. The hybrid apps we just talked about are like a high-performance sports sedan, a BMW M5 or a Cadillac CT5V Blackwing. They're incredibly fast, packed with tech, and can handle a track day, but you can still use them to go get groceries. They're civilized. The platforms we're entering now, they are Formula One cars. They have one purpose: to go as fast as possible. There is no infotainment system. The seats aren't comfortable. The learning curve isn't a curve at all. It's a vertical cliff face. And if you don't know exactly what you're doing, you will crash spectacularly. But if you have the skill, the discipline, and the knowledge, there is nothing faster on the planet. In this professional-grade arena, two titans dominate the landscape for the serious retail trader: TD Ameritrade's Thinkorswim platform and Interactive Brokers Trader Workstation, or TWS. They may seem similar at first glance, but they are built with fundamentally different philosophies for two distinct types of pro-level users. Let's start with Thinkorswim. This isn't just a platform, it's a laboratory. Thinkorswim is for the master strategist, the technical analyst, the options wizard who treats the market not as a guessing game, but as a complex puzzle to be solved. When you first open it, the sheer density of information is staggering. It's not a clean, minimalist interface. It's a cockpit with dozens of windows, buttons, and submenus, each one a gateway to another layer of data. The charting capabilities are, to put it mildly, exhaustive. You don't get 10 or 20 technical indicators, you get hundreds. From the simple moving averages to complex tools like Ichimoku clouds and Fibonacci retracements, it's all there. But it's the customization that sets it apart. You can overlay indicators, write your own custom scripts using their ThinkScript language to create proprietary signals, and save dozens of chart layouts for different assets and strategies. You can have a screen dedicated to monitoring futures, another for your favorite tech stocks, and a third for complex options spreads, all updating in real time. But its true killer feature, the one that makes it an unparalleled learning and testing tool, is the on-demand function. This is a time machine. You can go back to any trading day in the past, say the day of a major Fed announcement or an earnings release, and replay the entire day, tick by tick, as if it were happening live. You can place trades, test your strategy, see how you would have performed, and do it all without risking a single penny. It's the equivalent of a flight simulator for traders. You can practice landing in a storm 100 times before you ever fly a real plane. And then there's the Analyze tab, which is the holy grail for options traders. You can build any options strategy you can dream of: iron condors, butterflies, straddles, and the platform will graphically show you your exact profit and loss potential based on changes in the underlying stock price, time decay, and implied volatility. You can stress test your position against different market scenarios before you ever click buy. So, who is Thinkorswim for? It's for the trader whose edge comes from deep, meticulous analysis. The person who wants to spend hours dissecting charts, backtesting strategies, and modeling outcomes before placing a trade. It's for the trader who believes that winning is determined by the quality of their preparation. The platform's execution speed is excellent, but its soul is in the analysis. It is the ultimate strategic weapon. Now let's turn to the other titan, Interactive Brokers and its flagship platform, Trader Workstation. If Thinkorswim is the laboratory, TWS is the execution engine. It's a brutalist masterpiece of efficiency. It is not pretty. It looks like it was designed by engineers in the late 90s and they just kept adding functionality without ever updating the look. But that's because every single line of code is dedicated to two things: speed and access. Interactive Brokers, or IBKR, is for the trader who has already done their analysis. Their strategy is set. Now they need to get their orders into the market as fast as humanly possible, at the lowest possible cost anywhere in the world. TWS is their weapon of choice. Its first major advantage is direct market access. With many simpler brokers, your order goes to them, and they might route it to a third-party market maker to get filled. With IBKR, you are connecting almost directly to the exchange's servers. You can specify which electronic communication network, or ECN, you want your order routed to. This level of control allows traders to hunt for liquidity and get the best possible price, shaving off fractions of a cent that, when trading thousands of shares, add up to serious money. This leads to their second advantage: cost. IBKR's commission structure is built for volume. Instead of a flat fee per trade, they often charge per share a fraction of a cent. For a small investor, this might not seem like a big deal. For a day trader making dozens of trades with hundreds or thousands of shares each, the cost savings are astronomical compared to almost any other platform. Their margin rates are also typically the lowest in the industry, which is critical for traders using leverage. And third, their global reach is unmatched. From a single account, you can trade stocks, options, futures, forex, bonds, and funds on over 150 markets in 33 countries. You can buy shares of a company on the Tokyo Stock Exchange, short a future on the Chicago Mercantile Exchange, and hedge it with a currency trade in the London Forex market, all from the same screen. For the global macro trader, there is simply no substitute. So, who is TWS for? It's for the professional, the day trader, the swing trader, the algorithmic trader who uses IBKR's powerful API to connect their own custom software. It's for the person whose edge comes from speed, cost, and access. They don't need a platform to help them find a strategy. They have a strategy. They need a platform that will execute that strategy with ruthless global efficiency. It's less of a laboratory and more of a direct, unfiltered pipeline to the beating heart of the global financial system. It is the ultimate tactical weapon. Choosing between them comes down to a simple question: is your advantage in the planning or the execution? If you win by outthinking and outanalyzing the market, Thinkorswim is your command center. If you win by outmaneuvering and outtrading the market with speed and precision, Interactive Brokers is your gateway. These platforms represent the peak of what a single, all-in-one system can do. They are the Swiss Army knives for the financial elite, capable of handling virtually any task you throw at them. But what if you don't need a Swiss Army knife? What if you don't need a tool that does everything pretty well? What if what you really need is a scalpel or a sledgehammer? Because in the world of investing, sometimes the most powerful tool is the one built for a single specific job. And that's where we're going next. So let's talk about scalpels. If Robinhood or Fidelity are your Swiss Army knives, an app like tastytrade is a neurosurgeon scalpel. It's not designed to be friendly. It's not designed for you to casually buy a few shares of Apple. It's designed for one group of people, options traders. And it does that one thing with a level of precision that is frankly terrifying to an outsider. When you open an app like that, you're not greeted with a simple green buy button. You're greeted with a screen that looks like the command console of a starship. You'll see terms like probability of profit, implied volatility rank, and theta decay front and center. Why? Because for a serious options trader, the price of a stock is only one tiny piece of the puzzle. They're not just betting on a stock going up or down. They're betting on how fast it will move, how much it will move, and how all of that relates to the passage of time. A generalist app might let you buy a call or a put. A specialist app like tastytrade is built for crafting complex, multi-leg strategies like iron condors, strangles, and butterflies. It's designed for speed, for analyzing risk profiles in a visual way, and for getting in and out of trades with maximum efficiency. Using Robinhood for a complex option strategy is like trying to perform surgery with a butter knife. You might be able to do it, but it's messy, inefficient, and you're probably going to hurt yourself. The specialist app is the scalpel. It's sharp, it's precise, and in the hands of a professional, it's incredibly powerful. But in the hands of a novice, it's just a faster way to cause a lot of damage. This is the first and most important lesson about specialist apps. They are amplifiers. They amplify the skill of the user. If you know what you're doing, they make you better. If you don't, they just help you fail faster. But maybe you're not a high-frequency options trader. Maybe your style is the complete opposite. You're a dividend investor. You're not trying to hit a home run in a week. You're trying to build a machine that prints money for you while you sleep. Your goal is cash flow. You want to buy solid, stable companies and have them send you a check every quarter, which you then use to buy more shares, which then send you bigger checks. It's a slow, compounding snowball of wealth. For you, a scalpel is useless. You need a blueprint. You need a tool that helps you visualize the machine you're building. This is where a platform like M1 Finance, while having broad appeal, really shines for a specific style. Its pie investing concept is tailor-made for the dividend-focused mindset. You decide your ideal portfolio, say 10% in Johnson & Johnson, 15% in Coca-Cola, 5% in a REIT, and so on. You create this pie. Then, every dollar you invest, whether it's $100 or $1,000, is automatically allocated to maintain those perfect percentages. When your dividends get paid out, they don't just sit there as cash. They're automatically reinvested back into the most underweight slice of your pie, constantly and perfectly rebalancing your machine. An app like this changes your entire focus. You stop worrying about the day-to-day price of a single stock and start thinking about the health and output of your overall portfolio. It's a tool designed for architects, not for traders. It shows you projected annual income and tracks your dividend history, turning the abstract idea of passive income into a concrete, measurable number. Now let's talk about the sledgehammer. What if you don't have the time or the confidence to be a surgeon or an architect? What if you believe in the wisdom of the crowd? This is the powerful and potentially dangerous world of social and copy trading, embodied by platforms like eToro. The idea is intoxicatingly simple. You find investors on the platform who have a proven track record, you look at their stats, their risk score, their historical returns, and then you click a button that says copy. From that moment on, your account automatically mimics every single trade they make proportionally. If they buy Tesla, you buy Tesla. If they sell their entire portfolio and go all in on a small-cap biotech stock, so do you. This is the sledgehammer because it's a tool of immense brute force. It allows a complete beginner to potentially leverage the expertise of a seasoned pro. You're not just getting their stock tips, you're getting their exact execution in real time. The upside is obvious. You can achieve returns you might never be able to on your own, and the learning curve is almost zero. But the risks are just as massive. You are tying your financial fate to a complete stranger. Are their past returns a result of skill? Or just dumb luck in a bull market? Are they about to change their strategy? Are they about to have a personal crisis and go on a gambling spree with their portfolio? And yours? The sledgehammer can build a house, but it can also smash through a wall you didn't mean to break. It's a tool that requires an incredible amount of faith and a deep understanding that you are outsourcing not just your research, but your entire decision-making process. And what if even that is too much effort? What if your ideal investing style is to not think about it at all? This is another form of specialization, and it's one of the most popular. It's for the person who knows they should invest, but finds the whole process intimidating, boring, or anxiety-inducing. For this person, the best tool is one that's invisible. Enter the world of micro-investing apps like Acorns. The genius of Acorns isn't in its investment options. They're mostly simple, standard ETFs. The genius is in its psychology. It pioneered the roundup feature. You link your debit or credit card, and every time you buy something, a coffee for $4.50, groceries for $78.20, the app automatically rounds up your purchase to the next dollar and invests the spare change. That 50 cents from your coffee, that 80 cents from your groceries, gets swept into your investment account without you ever feeling it. This is a tool designed to overcome the single biggest barrier to investing for most people: inertia. It removes the pain of the decision. You don't have to decide when to invest or how much to invest. It just happens silently in the background of your life. It's the ultimate set-it-and-forget-it tool. It's not for someone trying to beat the market. It's for someone trying to get in the market without the fear and friction. It's a specialist tool for building a habit, for making investing as thoughtless as breathing. Finally, there are specialist apps that don't just offer a different way to buy stocks, but offer a different asset class altogether. For decades, if you wanted to invest in commercial real estate or a portfolio of rental homes, you needed to be an accredited investor with hundreds of thousands, if not millions of dollars. It was a club with a very exclusive guest list. Now, apps like Fundrise or Arrived Homes act as a specialized key to unlock that door for everyone else. These platforms allow you to invest in a portfolio of real estate, from apartment complexes to industrial warehouses to single-family rentals, with as little as a few $100s. You're buying a tiny slice of the property, and you get a tiny slice of the profits, whether from rental income or the property's appreciation. This isn't a stock or a bond. It's a completely different tool for a different job. Diversification outside of the stock market. It's for the investor who wants to own something tangible, something that isn't subject to the daily whims of Wall Street. From the surgeon's scalpel of Tasty Trade to the architect's blueprint of M1 Finance, To the brute force sledgehammer of eToro, to the invisible habit builder of Acorns, the lesson is the same. The best app is a myth. The question is never what's the best app? It's what am I trying to build? And once you know the answer to that, you can find the right tool for the job. We've looked at the all-in-ones, the old guards, the disruptors, and now the specialists. We've covered almost every tool in the toolbox. But there's one final piece. The most important piece. It's not an app you can download. It's the plan you make before you ever press buy. It's the strategy that governs every decision you make, regardless of which platform you use. And getting that right, that changes everything. Because the app is just the car. A shiny, fast, feature-packed car, maybe. But your investment plan? That's the GPS, the driver's license, and your knowledge of the road all rolled into one. You can have a Ferrari, but if you don't know where you're going or how to drive, you're just going to end up wrapped around a telephone pole. The goal isn't to find the fanciest car. The goal is to become the best driver. So, how do you build that plan? You start by asking yourself 4 brutally honest questions. And your answers will point you to the right app with more clarity than any online review ever could. Question number 1. What is my actual goal? And be specific. To make money is not a goal, it's a wish. A goal sounds like this. I want to have a $1 million nest egg for retirement in 30 years. Or, I need to save $20,000 for a down payment on a house in the next 5 years. Or even, I want to generate $500 a month in passive dividend income within a decade. See the difference? Each of those goals dictates a completely different strategy. Retirement in 30 years allows you to take on more risk for higher growth. A down payment in 5 years means you need to be far more conservative, because you can't afford a market crash right before you need the cash. Defining the destination is the first and most critical step. Question number 2. What is my true time horizon? This is linked to your goal, but it's about how you view time itself. Are you a true long-term investor, someone who can buy a broad market index fund and genuinely not look at it for a year? Or does the idea of daily market swings fascinate you? Are you trying to build generational wealth over 40 years? Or are you trying to capitalize on a market trend over the next 6 months? There's no right or wrong answer, but lying to yourself here is financial suicide. A long-term investor can ride out a 30% market drop, knowing that over decades the market trends up. A short-term trader sees that same 30% drop as a catastrophic failure of their thesis. Your timeline determines how much turbulence you can handle. This leads directly to question number 3, the most important one of all. What is my emotional risk tolerance? This isn't a theoretical question. I want you to actually imagine this. You've invested $10,000. You wake up tomorrow and the market has crashed. Your account now shows $6,000. A 40% drop. It's all over the news. Pundits are screaming about a recession. Your friends are panicking. What is your gut reaction? Is it a knot in your stomach? An overwhelming urge to sell and cut your losses before it goes to zero? Or is it a flicker of excitement? A thought that says, wow, the entire market is on a 40% off sale. Maybe I should buy more? Be honest. Most people think they're the second type, but when the pressure is on, they act like the first. If the thought of a major loss makes you physically ill, you have no business picking individual stocks or trying to time the market. Your strategy should be built around mitigating that emotional response, likely using diversified, low-cost funds that you can set and forget. If, however, volatility genuinely excites you as an opportunity, then a more active, hands-on approach might be in your DNA. Your risk tolerance isn't about how much money you can lose. It's about how you will behave when you are losing. And finally, question number 4. How much time and effort am I realistically willing to commit? Do you have a demanding job, a family, hobbies? Do you want your investments to be the most boring, passive part of your life, working quietly in the background? Or is learning about financial statements, listening to earnings calls, and analyzing charts something you genuinely find fascinating? If you want to spend less than an hour a month on your investments, you need a strategy built on automation and simplicity. Dollar cost averaging into a few ETFs is perfect. But if you're planning to dedicate 5 to 10 hours a week to research, then you need a platform that can support that hobby, with advanced tools and deep analytics. Don't choose an app that demands a level of engagement you can't sustain. That's a recipe for burnout and bad decisions. Now let's put it all together. Once you've answered these 4 questions, the perfect app for you practically reveals itself. Let's say you're a 25-year-old. Your goal is retirement in 40 years. Your time horizon is massive. Your risk tolerance is high. But you're also busy starting your career and don't want to think about it every day. You can only commit an hour a month. Your plan is clear. Automatically invest a set amount of money every single month into low-cost, broad market index funds like VTI or VOO. For you, the best app isn't one with complex charting and options chains. It's one that makes this simple automated strategy as cheap and easy as possible. The classic Big Three Vanguard, Fidelity, Schwab are perfect. M1 Finance, with its automated PI investing, is also a fantastic choice. You don't need the complexity of Thinkorswim. In fact, it would probably just tempt you into making decisions that deviate from your winning plan. Now let's take a different person. A 40-year-old with a stable job who finds the market genuinely fascinating. Their goal is to generate supplemental income by actively trading a small, dedicated portion of their portfolio. Their time horizon for these trades is short, maybe a few weeks to a few months. Their risk tolerance for this specific money is sky high. They're prepared to lose it all. And they're excited to spend their evenings and weekends digging into company research. Their plan involves technical analysis, fundamental deep dives, and maybe even selling covered calls. For this person, a simple app like Acorns is completely useless. They need power. They need real-time data, advanced charting tools, sophisticated order types, and robust research materials. For them, the best app is a powerhouse platform like Schwab's Street Smart Edge, eTrade Pro, or the legendary Thinkorswim. These platforms are the right tools because they are built to execute that specific active strategy. You see how this works? We didn't start with the app's features. We started with your features, your goals, your timeline, your emotions, your commitment. The single biggest mistake new investors make is choosing a tool before they've drawn up the blueprint. They download the hot new app, get overwhelmed by the flashing lights and endless options, and start making decisions based on hype and fear instead of a coherent personal plan. So my final piece of advice is this. Before you download anything, before you read another review, take out a piece of paper. Write down your answers to those 4 questions. Define your own personal investment philosophy. Are you a passive builder of long-term wealth? Are you an active, curious speculator? Are you a dividend-focused income seeker? Once you know who you are as an investor, the choice becomes simple. You're no longer looking for the best app. You're looking for the app that best fits you. The one that makes executing your personal plan as seamless and efficient as possible. Stop searching for the perfect tool. Start building the perfect plan. I promise you the right tool will be waiting for you when you're done.